Alright, so welcome back to my channel. My name's Tian, also known as Take Note. In my last couple of videos, I've been talking about how we've been looking for a decline from our equal highs right here, and I've actually just positioned into a short position. So I thought I haven't released a video this weekend. I might as well do a video analyzing why I'm getting short into the market at this current level, and also analyze the chart so you have an understanding of my thought process. So I do this with Live Capital for a funded prop firm. This is my current position. I've recently just got short. This is the current trade, so it's just been opened, currently running, as you can see. This is my entry, $97 in profit, risking 1%. All right, so let's discuss a little bit about why I'm getting short into this market from here. What I'm going to do, I'm going to wipe the chart clean, and then we could go ahead and analyze this US 30 chart. Just to be clear as well, I use a flat 250 pip stop loss as a swing trader. I'm not really a swing trader, I'm actually a day trader, but I use swing trading concepts, and I tend to hold my trades over particular periods of time if I can see a good opportunity to do so. All right, so if we head onto the daily chart, what we can see was that price was trading to this high right here, where we had a sweep of liquidity, and these levels of liquidity was swept on the 20th of May. So if we sweep a level of liquidity, what we're looking for is for price to market structure shift lower, which we had right here. But then price failed to go lower after the market structure shift, and then we sort of just traded sideways for a period of time. Pretty much from the 22nd of May up until now, we've just been trading sideways. During that period of time, we've managed to set up equal highs, which we also swept right here, and you can see these equal highs give us an opportunity to short the market down if we get another market structure shift, which is what we got on Friday with the Iran news. We had market structure shift right here. I'll get rid of this one. We had a market structure shift here, which closed on Friday lower, and then we had price rally much higher today. So what was I looking for today? Today I was looking to be able to position into the market at after a sweep of Asian session highs. And if we take a look, this is where the Asian session high was, and price swept it, we bounced off it, and then we rallied higher. The rally higher that occurred after the Asian session highs, I believe, was an attempt to sweep the market, further liquidity that was resting here of the sellers, and now we're seeing price come back down to trade down back into this range. All right, so if we actually take a look at what actually happened on our higher time frame, and we focus mainly on the higher time frame, if I hop onto the daily chart, what you can see is price rallied all the way up to this level right here. And when price has a massive engulfing candle like this, we expect price to present a fair value gap within this area. So that means price today would have needed to close, leaving a gap in between the low of this candle and the high of this candle. And if we take a look at what happened, we didn't get that. We actually got a rebalance. And what a rebalance means is basically price rallies all the way up to fill the gap. So that means you no longer need to expect a fair value gap. So from this area here, I've now looked to aim to position short. I've got my stop loss roughly around here. And as I mentioned already, we're targeting lower levels of liquidity, which is right here, which has not yet been swept. And why is this an important target? If we take a look deeper, this low and this low, they have not been swept. So this area, this line, the low of this candle was not swept here. So what this is known as, is called a pool of liquidity. It means that buyers got into the market here, and buyers also got into the market here. So that means if we know buyers are positioned there, we know that there's a whole bunch of stop losses sitting in this area. And I'll make this a bit clearer for you guys to see. So if we call this red zone our liquidity level, or the area where all the buyers are positioned at, what we can now expect is for institutions to force price lower in an attempt to target the buyers resting at this level. And why is this important? If the market is going to trade in an uptrend, institutions need to be able to position. So where they're going to position? They're going to position in the area of liquidity, because institutions need to buy the market in an area from market participants. So they know that there are buy traders have their stop losses positioned here, because if you was to get into a trade here, you would have your stop loss roughly around this level, and you would have targeted up here. So all the people who position long here, and quite a few other people got into the market around here as well. All of this liquidity is going to be targeted by institutions. And we know this because we had a market structure shift on Friday, and now institutions are aiming to target this lower level. So ideally, this is what the play is. This is how I'm positioned. This trade in itself, I have to say, I'm taking the trade because I have some experience in the markets and I'm good at managing my risk. So what that means is, if I don't want to take a loss on this trade, and the trade doesn't start moving in my direction relatively quickly, then I will move my stop loss to break even and exit the trade. I'm happy to do that. The main reason I'm mentioning this is because today is Monday, and if we take a look at the economic calendar for this week, we actually have news on Tuesday and on Wednesday. The main news of the week is actually the Fed funds rate on Wednesday and the press conference. Although we do have retail sales tomorrow, the market's going to be focusing on this. So unless the market moves quickly into the direction that I'm expecting it to go, I don't want to be in the markets for the news event. I don't want to have a lot of risk on the table for the news events. So hopefully we can get quite a substantial decline into the close today. But if we don't, I'll happily close the position later on today, if not tomorrow. So that's what we're looking at for today. We're looking at a sweep of this level of liquidity right down here. And if the market continues its decline aggressively, we can see liquidity down here also targeted, as well as liquidity down here. Well, my base case is if the market continues to go down, we just come down to here. Price gets swept. We don't need to target this level, but we have a massive sweep of these guys' stop losses before we end up continuing to the upside. So that's what I'm looking at today. That's the trade I've recently positioned into. Nevertheless, if worst comes to worst and I exit, I'll just look for another trade after the news event on Wednesday. There's no rush. So yeah, I hope you found value in this content. I'll see you in the next video.